Hello traders, Gary Wagner here just after 9 o'clock in Honolulu, 3 o'clock in New York on Monday. And this is the daily report for gold and silver. We do have the gold market trading slightly higher, mixed bag in the precious metals. We'll talk about that in a second. With a significant drop in US dollar value, equities also under pressure. When we look at gold today, we're currently trading at 1173.50. We have seen a low of 68.50 and a high of 77.10. Silver, in essence, trading unchanged on the day, although that had been fairly lower throughout the morning, currently trading under $16 at $15.98.5. In terms of the marketplace itself, in terms of highs and lows, we have seen a low of 88 and a high of 1611. So traders, the first thing that I do want to talk about today is our current trades that we are on. Of course, we went short gold. Following day, we went short silver. Yesterday, I sent out a special trade alert. In that trade alert, I gave traders two options. The first option was to simply lower stops. The second option was to exit at the market. For those that exited at the market, you're out at roughly this point. This is where the market was trading at. And I want to go through the thought process behind putting that particular call out and where I think the precious metals might head this week. Now, first of all, we're starting by looking at a 240-minute chart. This 240-minute chart is in Japanese average format, Elliott wave count, MACD. And when we look at the results of the data studies that we're looking at, we come to the following conclusion. First of all, if in fact, and this is a very minor count, 240-minute, but this is a wave 4 and a wave 5, this means that we'll go into some sort of an ABC correction, 1, 2, 3, 4, 5 ABC, A being up, B being down, final C being up over the top of B. Now, if that in fact happens, we could see a little pop back up in the market. When we look at our MACD, you can also see that they have crossed and momentum has shifted from this negative and has gone basically in a positive, but call it just neutral. It's at 0.60. So when we take into consideration all of those things, it is quite likely that we might see a pop or a higher price in gold over the next week. Now, that's a very, very short-term move because as long as the scenario that has been prevalent in the market, meaning the bear count that we're currently in the precious metals remains, we, in fact, should see lower pricing. However, we do have a wild card, and that wild card is the dollar. And traders, here's the key. The only thing that is holding up gold prices right now is weakness in the dollar. So for example, on today's move where it's sitting up $1 on the day, it's actually down about $12 in normal trading, but a weak dollar is providing it $13 to the upside, therefore the positive $1 on the day. And so when you really consider what's happening, there is absolutely no doubt, but we've got pressure in the market in terms of the downside and selling, and then a positive momentum or boost, really, and that boost really is coming from, as I said, a weak dollar. So I want to start by looking at the dollar index. And this, of course, is a daily chart. And really, we're getting an interesting scenario. Take a look. We're getting our cross here on the MACD. Momentum is now moving to the negative on that. More importantly, when we look at our set of channels, in other words, our overall direction in the market, which has been up ever since we had this decline here, then the market started trading higher here. However, look at where we're trading at now. Now, last week we did break below this, but we closed back up into this particular price zone, this price zone being right here. But today it's different because today you definitely have the dollar under some pretty severe pressure. So one of the things that we'll look at, and this is as we launch our new expansion pack, which we'll look at in detail these currencies, the one thing that you'll see is that if you look at the big picture of the dollar, even though the dollar is in a down cycle, that's a down tick, but in a master up plan. In other words, the majors are up. We're in a corrective wave in the dollar as we look at it right now. So traders, what about silver? Well, as you're well aware of, silver is still under pressure. We've got this down channel that we are tracking right now. Unlike gold, which was up just a little bit, silver is unable to overcome the added price climb from the weak US dollar and is trading in essence still unchanged, but now down almost a full cent. Now, when we take a look at this market in terms of a wave count, let's go ahead and blow this daily chart up here. And when we do that, what we see is that we're probably looking at a scenario in which we're in a, and again, this is a intermediate count here, but in which we're looking at a 1, a 2, a 3. We could still complete the 3 because it hasn't been that long, and then we will go into some sort of a corrective wave 4 before finalizing it with some sort of a wave 5. Wave 5, of course, should be below wave 3. For traders that are still in the position, we got short, of course, at around 1650. Our stop was moved to 1650. We did move our gold stops down yesterday. We said to act accordingly with silver. In terms of a price point itself, what you're going to want to look at is about 1625. 1625 on a protective stop in silver. Maintain current stop in gold and maintain your current stop now in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.